Hey guys, welcome back. Hope you had a good weekend. It's Monday, November 21st. We're gonna look at stock market, some futures, GME, options, what the TA is telling us, OPEX, Nopex, MOPEX, WOPEX. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at Happy Money YT and jump on our Discord server. Link for those are in the description. If you haven't seen the Ryan Cohen interview, I suggest you check it out if you are a GME investor. Here's our Discord. I might actually do a video kind of discussing it and reacting to it, like just watching through it and going over some stuff. It's kind of interesting. Got some thoughts on it for sure. It's like 40 minutes long though, so I'm not gonna do it in this video. SPY volume pretty low coming into Thanksgiving and the holidays. To be somewhat expected. I'm still bearish on it. Kind of came down a little bit, but nothing crazy. Down 0.3% today. Low volume. That RSI divergence is still there, so I still see us coming down before making new highs. If we do make new highs and continue a bear market rally, but I'm not sure if that's going to keep going or not. On the hourly, it's kind of danced back and forth on the MACD here. Looks like it's wanting to go back bullish. It's going bearish. Pretty flat overall. This thing closes. This MACD will close in what, 10 minutes. So it's bullish now, but yeah, I think I'm still pretty bearish on it. GME got extra special attention to the short side today. It just got dumped on 9.17%. And we saw this divergence if you watch Friday's video. Yesterday or Friday actually made that divergence. That's why I didn't see it before. I said in Friday's video, I'm like, oh, I didn't see this before. That's because it didn't happen until actual Friday closed and this RSI line came down and that created that divergence. So yeah, I was less confident in a run this week after seeing that divergence and seeing that it's bearish. And today's, I don't want to say solidifying it completely, but it definitely seems like more indication that we're not going to rally this week or retest that 35 this month. So we'll see though. I'm giving it still one more day tomorrow, but if it doesn't open out of the gates and have volume and seem really strong, then yeah, I think that's probably it for this little double top that we've had almost every time. Well, every time. So that would make this little rally here to 35 a new precedent and a new kind of a new price action to now watch and see if that repeats again, because we really haven't seen that before in that way where it didn't double top, other than somewhat January, but that was just so big and volatile. So post split price action has proven to be somewhat different, and the fact that it's just in this range, and this range is getting so tight and small and crazy. I mean, you can almost if you're trying to like even swing trade it, it'll fluctuate in a day or two from where your buys and sells are. So it's crazy. I mean, in one day, in one big day, you could basically trade this whole range from the bottom to the top. So when it does break out, I think it'll be a big one. I don't know if it'll break out to the downside or upside, honestly. But I think for now it's probably more downs and find support in that 24 and just see if it finds it there, breaks through that. You know, just keep looking for supports. Maybe come down here and test these lower 20 levels. Maybe come down further even. We'll see into the teens. But at this point, that RSI divergence is playing out. We're seeing it today with this big sell-off day. Might be a bit of a bounce tomorrow though, since today's pretty big. We're oversold on the hourly. Yeah. My plan was to, the swing shares I'm using, I was going to basically sell them back up here at the retest. I will probably sell those tomorrow if yeah, on a bounce. And then my calls, actually I closed today this morning for a bit of a loss, and then actually opened up covered calls. I wrote like 15 covered calls here, right here, for 27.5, and then I closed them here and they were up 50%. So that was nice. That was like 550, I think. Yeah, 'cause it was like 14. Oh, what was it? It was 1100 to open them, and then I closed them at about half. So, yeah, and I'll probably do the same thing tomorrow with covered calls, just on the shares I plan on keeping for the long term, which are now, I believe, I think they're now long-term shares in my E-Trade. That's cool. Natural gas rallied, beautiful. We were down on this on Friday, and our futures ripped up beautifully. I was up, let's see, at this point we're up like, where were we? Yeah, we're up like $1,000, and then like 1,200, and then I actually closed them. I had 3 micros to the long side. I closed them on this engulfing candle here. I just wanted to take profits, and then of course it found support there and kept rallying. I'm like, oh my. And actually before that though, I closed them here, my longs. It bounced up. I was like, okay, it's in a range. This engulfing candle, I went short here actually. So I went short here on them, expecting it to come back down to test this and maybe break through it, but at least to come down here. It didn't. It bounced off VWAP and just melted, and then it was starting to break this high. I'm like, oh boy. So then actually I went long, and I tried something new on futures today, because futures have an expiration basically, and instead of closing for a loss my short and then going long on the same date, I went long with the next date, so the ones that expire in January instead of December. But I still have the short on December, and then I went long on January's right here. So rallied those longs up. So then basically it was just like a spread, and my max loss more or less on it, I think, was like $400, because if I closed them both at any time, it'd be about $400, because my longs were gaining value as my shorts were losing value. And then up here I closed it out here, the longs, for somewhat of a profit. I can't remember, a couple $100, and then went long again when it broke that, and then closed that out for a loss. And that time I went long with more, which yeah, maybe I shouldn't have done. So, but all through this I held these shorts, these 2, and so this thing kept rallying up, and I almost averaged into it. I'm like, I really don't want more exposure to the downside on this, since I'm bullish on the longer time frames. And that brings us to the lesson I forgot to say at the beginning: trade the trend, even if you're trading on a short time frame. So my longer time frames are bullish on natural gas, 4 hour, one day, 1 hour, all these. You know, sometimes you can get a move in the opposite direction intraday, but the safest way is to just trade the trend and wait for it to find a dip or a bottom where you think it's reversing, and buy it if you're long. If you're short on it, opposite, of course. But today my lesson was, I'm trying to scalp it and get in and out too quick and trying to time the market too much, and then you're trading the short end when you're really bullish to the long end. What sucks then is because then it's harder to hold too, because you're like, oh man, I have this thesis, it's going up, and I've got this short. So it's easier to hold if you believe in the longer term trend is going in the favor that you're wanting. So at any rate, I'll probably keep holding those and just wait on that. But yeah, natural gas, nice gap up. It actually made a gap here. So there was a gap. I think it filled some of it, but then it made a gap from that gap up. Buy's coming down here. So yeah, I think this will probably continue, but it is pretty volatile. This wasn't really on any news as far as I know. I mean, I know the Northeast has gotten like crazy 6 feet of snow. That could be part of it. The Freeport facility or whatever, still no news on that. It might reopen back up in December. I'm a little confused on why that is bullish for natural gas. That, to me, more supply would mean it's cheaper. So don't quite understand that yet, but chart looks bullish to me. Actually, oil got wrecked today, and had this big rally because OPEC said they're going to intervene or something. But other than that, oil has been getting dropped on. So yep, GME might be setting up for maybe an earnings rally. Oftentimes when we've kind of dumped into earnings, it's rallied out like here and here. Kind of here, wasn't much of a rally, and Not really there. That actually only started on these last few. Before, because the timing, the earnings were always pretty much around the exact same time, within 1 or 2 days, and then RC threw a curveball this earnings and had it like a week and a half earlier than expected. And so basically the cycle and them covering and rolling over their futures basically lined up with after earnings end. So every time after earnings now, it just rallies and you think it's on earnings. Doesn't even matter what the earnings are. It's like their whole time frame on rolling over these cycles now makes it seem like it's an earnings rally, which is kind of funny. So I think we might be setting up for that, and if we might break the low before then, I'm not sure, but I'm less likely on a big rip tomorrow or this week for sure. So I'll be doing cover calls, and cash secured puts probably maybe open up some tomorrow with the capital that I'm gonna get from closing the swing shares. And here's our futures. So I've got these 5 short on the micro S&P still. So these are down like almost 1% on these. So that's just my bearish outlook on the SPY presently. And so let's see, just down a little bit. They'll be back break even, but we'll try and be patient and hold them and play it a little longer. I don't know. This one can be a big move. I mean, SPY doesn't move as much as natural gas right now, but it's a lot more notational value, so doesn't take much percentage to really move it. And then here's the 2 mini natural gas I have. It's actually not bad. It's come down quite a bit, so it's pretty close. This was negative $1,000 at one point today, but then I had the longs that were positive like 400, 500 bucks. Yeah, it's kind of cool to do that. So right now these are QGF3 is the ticker for /QGF3. That's mini natural gas for January, and then QGZ2 is the mini natural gas for December. So I'm short on these Decembers, and then I was long on the Januaries. So it's kind of a cool way to hedge. I mean, theoretically, you could just I've not tried it like this, but you could just go long and short at the same time, you know, at any price. So if you did it here, it doesn't really matter. And then it comes down here. If you're timing it and you're somewhat good, basically, you would close your short here. Once it was up, your long would be down, and then it'd come up here, and then you close your long, or you know, you could wait even longer and swing them both ways. But just basically closing them out once they have some profit and you think it's going to turn around. So kind of an interesting way to do it. Since there's no theta, it's really just like playing with shares more or less. You're just waiting for it to get back to that price. And then on the options, yeah, my bullish plays from last week, the ones I was doing with unusual whales, not so much. I didn't do a whole lot though, real small. Oh, and then my puts, so I got puts last week on GME. They were up like 80% today, but they're also there for margin for the futures. So to close them, I have to open up more. So I actually took profits. I rolled it. So I closed the 23 strike puts, whatever I had, and opened up 20 strike puts. So I decreased my margin, but I received credit to forward or roll this play because they were basically profitable. So now these puts are profitable, but I probably won't be able to close these unless if the futures, if I can bump up my margin a lot with the futures gains, then I'll be able to close these puts. But cover calls, I've closed those out for today, and then probably start doing those kind of daily scalps. Birds was ripping a lot today. I don't know why. It's so cheap. I think maybe just got some day traders in on it. Yeah, it just got plummeted after that earnings and what they said about it. Just not a very good outlook, but their numbers weren't too bad, so that's interesting. BBBY, this thing has gotten so cheap. It broke lows from COVID. It's at 1996 levels. Let's see. Yeah, back here, 96. That was the last time I was in the $3, like this $3 range we're in now. So it's definitely being priced in for bankruptcy, it looks like to me. But I don't see it going bankrupt yet. I mean, their revenue is 1.4 billion last quarter, 1.4 the quarter before, 2 in Q4. I know revenue it's just one small variable, but it seems like with revenue like that, they should be able to up their market cap. There should be value here because the market cap right now is 272 million. Market cap's not even a quarter of the revenue of 1 quarter, which is extremely low. If they just trimmed a bunch of fat, increased their margins, and I don't see why they couldn't be cash flow positive if they ran it right in a quarter. Maybe there's a lot of bureaucracy there they can't get through and red tape. But basically this is being priced in for bankruptcy. So if there's any sign that it's not going to be bankrupt and they're able to basically keep that going and just start trimming, I think this is extremely undervalued. Yeah, and even fair value on it where it's at right now compared to other stocks in this sector right now in this recession, I think it's even 2 to 3 times where it's at right now, even in this recession. So kind of interesting. If it doesn't go bankrupt, it definitely could be great value right now. Very similar to how GME once was. I don't think GME's there anymore, but when DFV bought in, it was, and Cohen, you know, back in this range. I think that's about what we're seeing on BBBY right now. But you know, there was positive outlooks for GME at that time. A new console cycle coming out, and then of course when RC jumped on board, that was the major catalyst. But DFE saw the new console cycles coming out and looked at their financials and he said, you know, this looks fine. So I think BBBY is kind of in that stage right now. It's just if it can shake off the sentiment and start to turn things around, then the stock price most likely will. But maybe they've got BCG consultants and stuff like that that I don't know about. I think Ryan Cohen's guys are still in there too, so I don't really know. His interview is really interesting though. I might do another video on that. Thanks for watching, guys. We'll see you on Discord. Peace out.